Hello and welcome to Fem Business. We're at Cybos and I'm in conversation with Joshua from Intellect Design. Joshua, welcome on the show.
Thank you, Amal.
So, I know that you're dealing with the cash management. People are going from traditional cash business to cashless economy. And we have seen rapid changes in the digital side, specifically the financial institutions. So, in this entire world where everything is going digital, what are the major differences that you have seen in your traditional cash management business compared to last 2 years?
Well, there's a number of changes that are going on that we've experienced over the last couple of years. Firstly, you've got technology change. That is the digital effect.
Okay.
The effect of technology change means that how we do business has also changed. This has been also changed by expectation change. So take, for instance, your own personal life. You may want to move money from rupee to sterling. And you don't expect it anymore to arrive in a week's time. You expect it to arrive same day.
Yes.
So there's a change that's happened within the business that wasn't there a few years ago. A few years ago, we just accepted, I'm going to move money, it's going to take me a week. So I'll live with that.
Okay.
Corporates, of course, have even higher expectations. They don't expect it on the same day, they expect it in a minute, and that's
Absolutely.
it. So they don't want to be waiting at all. So that's the technology change that's led to this expectation change. Two other things, though, in the business environment that have changed, particularly when we're looking at large corporates and large banks. There's regulatory change.
Yes.
And that's really affected both sides of the business. Corporations are having to manage their businesses in a much more auditable way. The governance has increased dramatically. And of course, the banks are being hit by all sorts of regulations coming at them from whether it's Basel or whether it's local regulators that are creating this impact of change. And then finally, what's really affecting the cash business, of course, is interest rates. For over a decade, we've had interest rates that haven't changed. All they've done is they've sat there pretty much close to zero for the major currencies.
Yes.
Well, in the last year, we've seen that change, and that is having a very dramatic effect on how people are managing their cash. Before they could just leave it anywhere, it really didn't make a lot of difference.
Okay.
Today, there's a huge opportunity, if you manage your cash well, to make a lot more returns on equity. And this is what we're seeing as the biggest change effect. A combination of the four of those, of course, means that what banks have to offer their corporates is dramatically different today to what they could get away with just 5 years ago.
So, if I ask you now, since you said that regulatory is one of the major change, how are you dealing with it? What is the major impact that you have observed after this dynamics?
So the banks, the banks are being forced to re-look at their liability portfolios.
Okay.
The liquidity that the corporates leave with their banks is now no longer all the same.
Okay.
Some of that liquidity is highly valuable.
Okay.
The money that's left with the bank because the corporate needs it for operational activities is much more valuable than cash that's just left with a bank that has no operational need.
Right.
So what the banks now need to do is to provide corporates with a way of moving that lazy cash into off-balance sheet investments, money market fund investments, term deposits, certificates of deposit, commercial paper and treasury bills. So the opportunity for the corporates to make a bit more money is there, and it's also, strangely enough, symbiotically beneficial for the banks to enable it as well.
Okay. So going ahead, what are the changes that you think? Because one, traditional market has changed. Second, there are regulatory impacts. So going ahead in specifically 2 to 3 years, what are the changes that you envisage, particularly in this cash management business?
Well, I think the payments business is going to continue to evolve and get faster and faster, driven a lot by regulatory requirements. The regulators are very keen to see that business is enabled through payments, it's not slowed down. So this is one thing. The second thing is corporates that are sitting on a lot of cash are going to be encouraged by their bank and enabled by their bank to access other investment opportunities, not just leaving the cash with the banks, because the banks can't use it and the corporates will not be rewarded for it. They may even be penalised for leaving the cash with the banks.
Okay, so that is a major change that you see.
That is a change that has come about over the last couple of years. So the way that the banks are going to adapt to that is by driving the cash off their balance sheet and into a range of investment opportunities that the corporates perhaps had not previously been considering.
But help me to decode this mystery. When the whole world is talking about the payments and everybody feels that digital payment is the future and let's go on digital, are people also like going strong against the cash?
Look, I mean, trade finance has been dominated by US dollar business for as long as I can remember, certainly for the last 50 plus years.
Yes.
Some of it still is being done in euros, but for a large currency block, it still occupies a very small amount of trade finance. The only other currency that has really started to come into the trade business has been the renminbi. And there was certainly been a desire to use the renminbi more, especially in Asia. However, increasingly the dollar remains the currency of choice for doing transactions.
Okay, but in cash management business now you're operating in UK, if I'm not wrong. What are the trends that you see in like 2-3 other geographies like Euro or America?
Well, in America especially, people are going to be chasing yield.
Okay.
So the corporate treasurers are going to be realizing that there's much better opportunity for their cash. The utility of cash for US dollars is going to open up a wide range of choices. Less so in the euro at this moment. At this moment, the euro rates still remain stubbornly low, but they will be dragged up inevitably by the US dollar. So as the US dollar continues to climb in its interest rates, so the euro will follow. And bear in mind that higher interest rates in the United States is going to increase the value of the dollar, which is not beneficial to the economies in Europe. So the euro is bound to slowly rise in terms of interest rates.
Will it also have the impact on the cash management business?
I don't think so, because corporate treasurers typically don't want to take risks, so they want to reduce the currency risk. They're not going to be swapping necessarily out of euros into dollars to make more money on dollar investments and then swapping it back into euros, because if there's devaluations, then they're suffering from currency fluctuations.
True. Great. Thank you so much for talking to Fin Business, Joshua. It was nice talking to you.
Lovely to see you.
Thank you. Thank you so much. And thank you so much for watching Fin Business.